Welcome back. We've got some interesting source material today, looking at some very specific digital asset movements recently. We're focusing on that late week period, right after a big economic event where things usually get sluggish.
That's right. But one major asset just completely broke away from the pack.
Exactly. So this analysis is really about digging into that divergence.
Right. We've got details on the volatility around the U.S. central bank decision, and then this, frankly, stunning performance from BNB, while most other things were just, well, quiet.
And the starting point, our sources show, is Bitcoin, BTC, slipping back after trying to break past $116,000. Meanwhile, most of the other big altcoins, pretty sleepy.
A classic weekend setup, usually.
Yeah.
But not quite this time. That contrast is where we start.
Okay, so let's unpack that roller coaster week BTC had first. The business week was, well, pretty dramatic.
Yeah, definitely defined by some big swings.
We saw that surge, right? From under $115,000, pushing up towards almost $117,000.
But then, bam, immediate rejection. Pushed the price south pretty fast, over $2,500 down.
That just screamed short-term uncertainty, especially with major news hanging over the market.
Oh, absolutely. And that uncertainty wasn't random. It was all about anticipation. Everyone was waiting for the U.S. Federal Reserve's FOMC meeting decision.
Right. Risk assets always get jumpy around those.
Exactly. And digital assets, especially. What was really interesting was the whipsaw before the news even hit. BTC jumped past 117K, then dropped below $115, then clawed back to 116K, all in just a few hours.
Wow. So traders were just positioning like crazy based on whispers and charts.
Pretty much. Heavy repositioning, definitely. Trying to front-run the outcome or maybe hedge against it.
And then the actual news landed. Our sources confirm the Fed cut rates by 25 basis points, or BPS.
Yep, the standard 25 BPs cut.
Now, for you listening, that's usually seen as a dovish move. It means easier monetary policy, cheaper money.
Which theoretically should push investors towards riskier, high-growth assets, like crypto.
So the textbook says BTC should have popped immediately.
That's the expectation, yeah. But what actually happened was a bit more complex. Initially, BTC was surprisingly quiet right after the announcement.
Like it was already priced in, or maybe indifference.
Could be either. It held steady for a bit. It wasn't until the early trading hours on Thursday morning that it finally made a move. Went on the offensive, spiked up to $118,000.
Okay, a multi-week high then. But it didn't last.
Nope. That momentum was very short-lived. That delay and then the quick fade, it suggests the market wasn't entirely convinced.
Maybe wondering if 25 BPs was enough, or if it signaled deeper economic issues.
That's a key possibility. It couldn't hold 118K. BTC started to gradually lose steam, drifting down through Friday to around $115,200.
And where is it now, based on the sources?
Kind of stuck, really, consolidating between $115,000 and $116,000. And the bigger picture supports that stalled feeling. Market cap around $2.3 trillion, Bitcoin dominance near 56%. Volatility, then. Fatigue.
Okay, but here's where it gets really interesting, the divergence. While BTC was having its volatile week and then kind of stagnating, BNB.
Ah, yes, BNB, the absolute standout. The rock star among the larger cap alts this past week or so.
It didn't just ignore the Fed news or BTC's struggles. It seemed to be playing a completely different game.
It really did. And what's striking is the strength and sort of the sustainability of its rally. Remember when it broke that big psychological number, $1,000?
Yeah, that was a huge milestone.
Well, it seems to have used that as a launch pad. It's been setting repeated new all-time highs since then, just showing incredible strength while the market leader, BTC, was basically treading water.
That kind of breakout, especially when the wider market is hesitant, that usually signals something specific is going on with that asset, right?
Absolutely. It rarely happens just by chance. You have to look beyond the macro headlines.
So what could be driving BNB specifically, according to the sources or typical patterns?
Well, unlike BTC, which gets pushed around a lot by macro stuff like interest rates, BNB's value is often tightly linked to its own ecosystem.
Yeah.
The utility of the token, what's happening on its blockchain.
Like token burns or new projects launching?
Exactly. A sustained rally past $8,000 like this often points to things like successful token burns reducing supply, making the remaining tokens scarcer, or maybe huge demand for the token because of some big high-profile projects launching exclusively on its chain, driving up usage and fees.
And this momentum just kept going even through the typical weekend slowdown.
Right through it. Defied that Friday fatigue completely. The sharpest move, our sources say, was about a 10% explosion in just 24 hours. That pushed it to a fresh peak, $1,080 on CoinDeco.
10% on an asset that size is massive. Speaks to real conviction from buyers.
No question. And even after pulling back just a little from that peak, which is normal, it was still clearly the top performer among the big guys. It showed real autonomous growth.
It really underscores that point about market specialization, doesn't it?
Yeah.
You have the Fed rate cut impacting BTC, but then this one asset just powers ahead on its own internal story.
Precisely. And if you zoom out again, look at the bigger picture, BNB's solar run looks even more impressive.
Why is that?
Because the total crypto market cap actually dropped overnight, lost about $20 billion, settling around $4.120 trillion.
So the whole pie wasn't getting bigger. Money was actually leaving the space overall, slightly.
Exactly. It wasn't a rising tide lifts all boats situation at all. Capital was clearly flowing out of some areas and being intensely channeled into specific bets like BNB that people felt strongly about.
What about the other major altcoins? ETH, XRP, Solana, Doge, Cardano, Tron, Chainlink, Avalanche, SUI.
Yeah, looking at those, the sources confirm that sluggish label fits perfectly. Basically, no big moves, just flatlining, drifting sideways while BTC consolidated.
Huh.
Classic market fatigue for the majority.
Which really makes you wonder, if the majors were stagnant and the overall cap dipped, where else was the action? Were there other isolated pockets of strength?
There were. It wasn't just BNB. Our sources do highlight a few smaller assets that managed some pretty notable gains. It proves that targeted demand was definitely out there, just very selective.
Okay, like who?
Well, Aster apparently kept flying, added over 40% in value in just the past day. That's explosive.
40%, wow.
Yeah, and M was another one, up 18%. IP also saw a solid 15% increase.
So what does that usually point to? Project-specific news?
Most likely. For assets like Acer, M, and IP to move like that against the grain, it often suggests something very specific to them just happened. A big partnership announcement, maybe a successful tech upgrade, a key governance vote passing, something that excites their specific community and investors.
It really paints a picture of the market being less like one big ocean and more like a collection of separate lakes, each with its own weather.
That's a great way to put it, a series of unique microclimates. And it wasn't all positive selectivity either.
Meaning some assets went down.
Yeah, we have to mention the other side to show how selective capital was. HYPE, for instance, took a dive, plunged over 5% in the same period.
So money moving out of underperformers' assets without a strong immediate story and into those with clear catalysts or momentum.
Seems like it. Very rapid reallocation based on performance and perceived value. Little patience for things that aren't delivering right now.
Okay, so let's try to tie this all together. What does this super selective environment really tell you, the listener?
Well, the sources show a market that's complex, maybe maturing in a way. You had a huge economic event, the Fed rate cut, which definitely caused ripples, especially in BTC initially.
Right, volatility first.
But it didn't spark a sustained market-wide bull run. Instead, what stood out were these individual stories. Assets like BNB, Aster, M, IP finding their own powerful reasons to rally, hitting impressive gains, even new all-time highs for BNB.
It really reinforces that idea that you can't just watch Bitcoin anymore, just watch the Fed. Decoupling is real.
Absolutely. These individualized rallies are key. Market trends are just not uniform, especially when the leader, BTC, is taking a breather or consolidating. The big takeaway is that internal factors things within an asset's ecosystem, like its utility, tokenomics like burns, new launches. These seem powerful enough now to drive significant price action on their own.
Almost regardless of the broader macro noise that usually dictates the rhythm.
To a surprising extent, yes. It suggests that understanding the specific drivers of different ecosystems, the utility, the governance, the development roadmap, is becoming just as critical, maybe even more so sometimes, than tracking Fed statements.
So here's something to think about then, a final thought for you to mull over.
Why do certain assets, like BNB breaking $1,000 and just keep going, achieve this kind of massive sustained momentum, specifically when the market leader is quiet or drifting on a weekend?
Is it purely about their specific project updates hitting at the right time?
Or does it represent something deeper, maybe a shift where serious capital, perhaps institutional money, is getting more specialized? Are they actively rotating into ecosystems they believe have strong fundamental utility, regardless of whether Bitcoin is pumping right now?
That level of decoupling, that independence, that's probably the most fascinating question to keep exploring. What drives that specific localized demand when the rest of the market is quiet?